What is up, everybody? Good morning. Happy New Year's. Apologies. I think I forgot to unmute the music, so you're all waiting in silence there. But we'll fix that. We'll fix that next time around. Uh, I see a bunch of people in the chat. Shout out Jensinius, Franco, D. Koch, Marty. How are you, buddy? Good to see you. All right, so it's a new year, new opportunities to take a step back, have a fresh start, fresh P&L, reassess our biases, our portfolio construction, start anew. I'm looking forward to it. What's up, Estence? Good to see you, buddy. We're going to go over a lot of high time frame ideas today, some low time frame stuff as well, but a good opportunity to take a step back and check the yearly charts, the yearly candles, something we don't get to do very, very often. So looking forward to that. We're going to talk about crypto today. We're going to talk about stocks, commodities. Got some chart requests from you guys. Going to talk a little bit about uranium, Tesla. A lot of exciting stuff on the docket. But before we get started, a couple orders of housekeeping. Like the stream if you're here, helps me out, and be sure to subscribe, turn on that notification bell so you don't miss the streams. We are going to be doing weekly live streams now. It's a new year, it's a new me. I'm committing to this thing. I promise you all. So mark this on your calendar every Monday. I appreciate it when you guys join me. One last order of housekeeping. We got the public launch today of the free Magic Lines Discord. I am in there daily posting my thoughts on stocks, commodities, crypto, giving trading education. A lot of good stuff going on there. So I would love it if you guys would join, become a part of the community. I am trying to grow this into the best damn finance community on the whole interwebs. We got a link in the video description down below. I think the last invite link I had in previous videos expired, so my bad on that. But that one should be working, so give that a click, join the Discord, and say hello to me when you're in there. All right, without further ado, let's get into the charts, shall we? We're going to start with our orange friend, Bitcoin, and see what we got here. Let me clean up this alert. Get rid of that. Okay, so we've got a new Bitcoin yearly candle. And I hate to be the bearer of bad news, but it's not a bullish yearly candle. It's not. We got a failure to close outside of the 2024 range. Long wick, red candle, or blue candle in my case. So from a candle science perspective, the initial target for this year is the mid-range of the candle high that we swept out. Very basic stuff. That would put us at around 73K. So that's what we want to keep in mind here starting the year off. Now, when you have a yearly candle, I like to pair the yearly candle with either the monthly or the 2-week chart for my lower time frame analysis. I think the 2-week is a little better because it gives you a little earlier alerts as to changes in the high time frame order flow. But the monthly candles can be used as well with this, right? So if we drop into the 2-week chart here, you can see the market structure. I'll mark it out for you, right? So there's your higher high, your higher low, your higher high, your higher low, higher high, higher low, higher high, higher low, higher high, and then in September, we had the break of structure, and we've entered bearish structure on the 2-week chart, right? So whenever you have a sweep of a candle like this, especially a thick expansion candle, right? And you get this failure to close red candle, your immediate thought is to zoom into the lower time frame structure that pairs with that candle. In this case, we pair the yearly with the 2-week. We want to see if there's a bearish shift in market structure, or a change in the state of delivery. And what that is simply a close below the series of candles that swept the high. So you can see right here in the chart, when we closed below 101K or so on the 2-week, that was your change in the state of delivery. And as far as I'm concerned, we are now in high time frame bearish order flow until proven otherwise. And the target I have in mind is this 74.4K or so liquidity. This looks like a very clean target for me on Bitcoin. This would take us pretty nicely to the yearly mid-range. Let me mark out the yearly mid-range again because I deleted it there so you guys can see it. There's the prior yearly candle. We'll make a thick horizontal candle here for our prior yearly mid-range. There it is. Now when we pop back to the 2-week chart, you can see how nicely this level sets up, right? We got the mid-range there, major liquidity, and then below that major liquidity, we have all of this demand. And if I zoom in a little bit to the 3-day chart, you can see within that demand, there's this juicy little lower time frame order block here. This order block is critical. This is the demand responsible for breaking out of the previous range. You can see we came back down, didn't quite tap it before moving higher. So one tool that I like to use when I'm trying to think, is a particular zone going to hold, right? So this right here is a major zone from 76K to 110K or so, right? And we're often trying to figure out when price comes back to an area of demand, like, is that area of demand going to hold? Are we going to put in a higher low there and continue the trend? And in this instance, I don't think that's the case. Reason one is because we have the draw of the yearly mid-range, which is a very high time frame level, this major area of demand here. And then the other reason is that I like to use these fibs for range deviation. So I have them set up here. You can set this up on TradingView pretty easily. You go 0 to 1 with the 0.5 for the mid-range. And you go 1.25, 1.5, negative 0.25, negative 0.5. This is a cool little trick because you can kind of measure the strength of a breakout from a particular range. Now, as a good rule of thumb, when you have a range, you have a zone like this, and price moves up and closes above the 1.5 from that range, that's typically a good area of demand that you can rely on price finding a bottom in. The exception would be if there was some higher time frame level up there and we took liquidity. Now price may have completed its objective and it could be doing a deeper retrace into the range, and so that zone might hold. But here we just have kind of like a blue sky breakout. There's nothing that we took up here, but you can see on the 2-week chart like how cleanly price is respecting the 0.25 here. No candle closes above. So that to me suggests that this whole move here is a deviation of the range high. And I would expect a similar deviation to happen here at the range low into, I don't know, maybe 65K. It's hard to say how low this is going to go, but I think we're going to go below the range, and we're going to wait for some sort of lower time frame signal, some market structure shift, something like that, to get on sides for a long trade. At that point, there is a chance that this can just reverse and go back to new all-time highs. There's no reason why we can't do that. I think that's less likely. And I think that if this area of supply here hasn't been tapped yet, there's a good chance that price kind of comes back over and then puts in sort of like what would be a very high time frame head and shoulders pattern, and then possibly moves lower. At that point, if we fail to put in a new high, this starts looking pretty ugly. So if we roll over here, maybe we come down, sweep out this low, and then bounce here and put in a lower high, this probably means that we're going all the way back into this prior 2021 bear market range, or 22 bear market range rather. The next point where we could maybe bottom might be the mid-range around 40K. Take out this kind of ETF launch low. But it is possible for Bitcoin to go all the way back to range lows. A lot of people seem to think that Bitcoin is invincible and this is not possible to happen, but it definitely can happen, right? So that's the high time frame picture on Bitcoin. Now, on the lower time frame, again here on the 2-week chart, let's mark out the yearly open first, because that's a pretty important level. So we'll mark that out in yellow there. That's our yearly open. The 2-week, the yearly, all this stuff is kind of bearish, and you can see we're pumping straight off the yearly open. This is typically not a bullish sign, right? When you have opening prices of particular ranges and you are biased in a particular direction, it is very common to see price move in the opposite direction at the open of that range to take some sort of lower time frame liquidity, fuel up, and then go in the opposite direction. And I suspect that that is what is happening here. Now, you can see on the 2-week candle, a lot of people make trading like too complicated because they're zoomed in here on the 1-hour chart, and like this is like, what the hell is going on here, right? Like, good luck trying to paint a picture on that. But if you come here to the 2-week candle on Bitcoin, it's pretty simple in my opinion, right? We've got this bearish expansion candle. We left behind a fair value gap here. And this low here is a very weak kind of low. This is not the type of low you see for like a bottom, right? You see this low is just chilling here. Nothing happened to it. Normally, at sustainable bottoms, we like to see a low put in, and then we like to see that low swept. Even here on this minor bottom back in January 24, you could see the low and then the sweep. Nice little sweep candle there. Same thing the beginning of 2025. We put in multiple sweeps, and then again, you ended up with this nice kind of hammer candle, and we continue with the expansion. And you can see at the top of the range, we have a very strong high because we have this level that we swept out and this level that we swept out. And this is suitable for like a sustainable reversal. So these type of V-bottom moves that just immediately bounce, these are usually retraced. It's just a question of like, where is this going to go? But I would be fairly surprised if this doesn't roll over and take out this low. I suspect that when we roll over, we're going to take out all of these lows. This kind of looks just looks a little like bear flaggy to me, honestly. You can see here, we're just putting in all of these higher lows, right? So low, higher low, higher low. None of this has been swept out. We're basically just building up downside liquidity. I know everybody's getting all excited because we're pumping, and basically whenever price pumps, everybody gets bullish, and whenever it dumps, everybody gets bearish, because that's how it works over on crypto Twitter. But here on the lower time frame, like the daily chart, you can see this pretty clear range we have, right? Your range high, take some liquidity, expansion, range low. It's not really anything in the middle here, right? So I am expecting to start the year some sort of move up here, some sort of liquidity grab, and then I'm expecting us to go ultimately for this 73, 74K low down here. Turn that black. And I think there we can start talking about maybe looking for some sort of swing trade. But even there, I would cautious against like taking this to new all-time highs. It could be a super, super high bounce though, right? Like this thing could bounce 80% or so, depending on how low this goes. It'd be quite the move. But in the context of the higher structure, I don't know that I would be excited to take this to all-time highs. And if Bitcoin does go to all-time highs from there, I'm going to miss that trade. Because as those of you who've been following me know, I got kind of generally bearish on crypto beginning middle of last year and basically started moving a lot of money over into stocks. And that's because when we look at the Bitcoin NASDAQ chart, and try to gauge the relative strength of these two asset classes, Bitcoin looks kind of bad versus stocks, because if you plot the high time frame range here, this just looks like a very weak deviation of the range highs. And so the expectation here after this huge sell-off is a bounce, because we have to put in some sort of higher low at some point, even if we are going to go lower. But then I would expect this to roll over to at least the mid-range here. Possible we could go higher after that. But in reality, like, all of this looks very weak to me. And as insane as it sounds, like, I wouldn't be surprised if price comes all the way back down and takes out everything all the way back to kind of the 21 bear market lows and then makes like a move up. Because this area of demand here that gave us that nice move up in 2021 hasn't really been mitigated yet. We had a tap into the top of this zone, but like the mid-range of this zone here hasn't been tagged yet. So this is a definite possibility, and it's a reason why I've been recommending people not be overweight crypto. It's a very dangerous time for people because crypto has been going up only for basically the last nearly 20 years at this point. And we're all conditioned to the idea that, yes, it goes down, but then like whatever, we just buy, we just keep buying as it goes down, and then it goes up again. But there's no reason this has to be the case, right? And everybody in Bitcoin land loves making all of these like definitive rules and patterns where we have like a sample size of 3, right? They'll be like, oh, 4-year cycles are a thing because we've had 3 of them, right? Or, oh, it goes down 1 year and then the next 3 candles are green because that's happened 3 times, right? But there is a chance that you are witnessing like a kind of generational top in Bitcoin, because Bitcoin has done all the things it was supposed to do. It got the ETF, it got the worldwide acceptance, it got the president who likes Bitcoin, the strategic reserve. It got a guy basically mortgaging his entire company to buy Bitcoin. And in spite of all that, we have failed to sustainably break above stocks. Like these are red flags. So I am putting crypto in the swing trading bucket for now. I will happily swing trade the asset class. I don't really want to sell any more of my Bitcoin because I do think you should have some Bitcoin in your portfolio. I just know a lot of people who are sitting with like 80% of their retirement account in Bitcoin right now because it goes up, it's made them rich, and it just always goes up. And whenever it goes down, it comes back up. And I think that's unwise at this point. And I think it's especially unwise when you consider the backdrop we have right now in equity land, where we have this whole world of new possibilities with AI and all the things that are flowing from it. And there's so much interesting stuff to buy, so many things to invest in that are real companies that generate real cash flows. And it's hard to justify buying the magic internet money in the hopium that it keeps going up, especially when the main narrative it's supposed to be attached to, the debasement trade, is just getting absolutely shat upon by gold. Like you would think that Bitcoin would at least be outperforming gold as the higher beta version of the debasement trade. But this has not been the case lately. And gold has been wildly outperforming Bitcoin. If I observe this in terms of like range principles, right? So here's your range low. This reminds me of the Coinbase bottom that we bought a long time ago, where you had this kind of like inverted head and shoulders breakout. Right? This is not something that you want to fade. Like I wouldn't be fading this. And when you're overweighting Bitcoin relative to gold, you're basically like saying like I'm going to fade this pattern. When in reality, it's very possible that this goes all the way back to range highs, you know, which would be gold outperforming Bitcoin by another 150% or so with less volatility. Doesn't make a whole lot of sense to be overweight Bitcoin. You can kind of see that pattern I'm talking about here on Coinbase. Very similar, right? You get the sweep of the range low, and you had this inverted head and shoulder. And then you had this breakout of the neckline, and then up only we went for a while. Very similar to the gold Bitcoin chart. So not bullish Bitcoin in dollar terms, not bullish Bitcoin relative to the NASDAQ, not bullish Bitcoin relative to gold on higher time frames. Ergo, we concentrate our time, effort, and our money in other places. We take a swing trade if we get it. Otherwise, not really super interesting to me. Like I said, very interested in a Bitcoin swing trade below 74K somewhere. Otherwise, I think the short opportunity is more interesting from however high we end up bouncing from here back down to 74K. And that is sort of my baseline mental model for how crypto is probably going to go here to start the year. Now, when we move over to altcoins, let's take a look at ETH. We see on the ETH chart a similar story, right? So here's the ETH yearly chart. I've been tracking this chart for a while, been making conditional statements about this for a while, depending on how this yearly candle closed. It's a bit of an indecision candle, right? It is a doji, little Darth Maul, huge wick. But when I drill down a little more into it, right, this is sort of the last yearly expansion we had. You can see there's a flat bottom here. There's a big old gap. After this yearly expansion, we had this rejection candle that expanded in the opposite direction. And you can see how price traded up from the lows, swept the high, came back up, swept both of these highs, rejected. And now I am thinking basic range principles, right? We sweep out the top of the range. Where do we go? We go to the bottom of the range. And on Ethereum, that looks like, I would say at least $880, but in reality, probably deeper. If I try to find like demand, like where is there actually demand below the range, we can kind of draw this little area, which I thought was actually going to be our target during the last bear, but we kind of front ran this area. This is around the 420 meme level. So if we get 420 ETH, I think you gotta bid it for the meme value for sure. I am not so confident, however, that ETH won't make another high here actually before it dumps, because structurally on the ETH chart, I would actually say that this is your last valid 2-week market structure demand here. So we actually haven't really broken the 2-week market structure, in my opinion, on ETH. And also, if I come to the monthly chart, you can see this is a monthly order block. There's no other monthly order blocks coming up. So I actually do think there is a decent chance that ETH could come down here and then do this and then come back down, which would just be the most Ethereum thing ever, because everybody's sold here and then they're going to like FOMO back in here and then it's going to dump like 80% or something. Just pure cinema if that happens. So ETH swing trades for me, very similar to my thoughts on Bitcoin. I think this area around 2,500 or lower or so is a very interesting area to look for ETH swings. If I come down here to the 12-hour chart, you can see the same thing I was talking about on Bitcoin. We're building up all of this liquidity. And on the 2-week chart, if I clean everything up, you can see similar thing. We have this expansion candle and we have this like naked low here that's been unswept. So this level is just going to be a magnet for price, in my opinion, to come back to. I would be somewhat surprised, although it wouldn't be unheard of for us to trade 3,600. There's a little bit of a fair value gap there, but I would expect this to probably cap the upside on ETH. Wouldn't shock me, honestly, if we topped in here. Like I could see Bitcoin putting in like a higher high above here on its chart and ETH putting in like some sort of lower high. Like that wouldn't surprise me. But I don't want to long this. I think you can long this if you're like a shorter time frame trader, but if you're trying to take like multi-week swings and not think too much and not obsess over lower time frame price action, I don't think FOMOing here is a good idea. And I would be waiting for, ideally, some sort of move up, run this high back inside, and then short it down. That's probably the best setup I can think of on ETH. But once we get that, if we do get that, if I'm correct, and we come back down here into this origin order block, sweep out this 2,600 low, get something like that, right? That becomes a really attractive trade. Like I could see all of this getting taken out because I don't see a lot structurally here on the downside on the weekly chart here, nor do I really see it on the 2-week chart. So yeah, it wouldn't shock me if we saw 5K. Also wouldn't shock me if we just put in sort of like a lower high and then rolled over. But either way, like that could be a pretty attractive move. Again, you might be talking about like a 80% swing, even if this is bearish and ultimately dumps lower. So something to monitor. And then I think that a lot of altcoin charts are going to sort of show a similar setup to ETH. And some alt charts are more attractive because they actually have put in sweeps of these lows. I've been saying for like a while, actually, that altcoins look strong relative to Bitcoin, right? The problem is that Bitcoin has been weak. So even though the strength has been relative, you're still losing dollars trading the altcoins because if Bitcoin goes down and alts are relatively strong, they just go down less. And nobody's that excited about losing less money, right? But the others dominance chart looks pretty interesting. Like if we zoom way out on this chart and draw our market structure, there's your higher low, higher high, higher low. So very high time frame, your very high time frame structure is intact, right? This area here is just sort of like lower high territory. So this chart could move up all the way up here and bounce like that, create like quite the little alt season, just kind of go back to the supply. Very possible. And this would be quite the move. you can see here on the 2-week chart, we were talking about these 2-week candles before. We have put in a low and swept it, closed back inside. We've put back this low, swept it, closed back inside. So there have actually been some lows that have been put in and swept. And so I don't know that this October 10th candle is actually going to get traded on this chart before we go higher. And so when and if Bitcoin pulls back to that kind of 73K region, that could be like go time on a lot of alts. So SUI, I think, for example, has kind of an interesting chart. So here's the SUI monthly chart. If I zoom way in, you can see we put in a low and swept it. And if we look at where that sweep happened, it happened right at the mid-range of this huge demand area. So this is like a really attractive risk-reward region on SUI. I mean, you basically have this as your market structure. So this entire thing could just be one gigantic higher low, and we could come back up and even take this high. But even just coming up here to the 440 or so region, this I would say is still like relatively high probability, and that would be a huge trade. But even if you don't want to go that crazy, you could think of this whole trade as just a trade of the November range, right? So if we put in this November expansion candle and fail to close below this $1.33 level enough times, eventually price is going to move up, test the mid-range, right? So next target on SUI is probably around $1.84, right? You'd expect to probably see some sort of rejection off that mid-range and maybe put in a higher low. And then once that happens, price is going to want to go to the other extreme of that range. So you might end up with a move to $2.40. And if you look at the daily chart on SUI, like this looks pretty strong actually, because you have the original low from November put in here at $1.30, right? You then get this move at the start of December, sweeping out that low. In sweeping out that low, this is the series of down close candles on the daily that sweeps out that low. We then close above it and leave this high unswept. So when we come back into this zone and find support and then close above this series of down close candles on the daily, you can see, boom, move up. Price is going for this $1.80 level. Now, if there's a Bitcoin pullback, say SUI comes all the way up here to $2 and then Bitcoin finally dumps, right? It wouldn't shock me if Bitcoin puts in a new low, but SUI puts in like a higher low, maybe even comes back to this demand region. And then you get the move up to 240 and then potentially a move even higher, depending on how high crypto and aggregate wants to bounce. So if you miss this current move on alts, I don't think I would be chasing it, right? But there's generally two moves. You generally have the immediate move up from the bottom, and then you typically get some sort of retracement. And then if you see some sort of market structure shift in that retracement, and you can still frame out like a high time frame target that's like above you, you can then enter or re-enter and then get in that trade for the second leg, which is usually higher than that first leg up. So I think there's actually potentially good opportunity on the horizon to trade alts. It's just kind of painful when this is happening right now and you're not taking part in the move, but like this is a This is pretty up only move. Like even the 4-hour chart, there's no market structure here. It just goes straight up. So there will be a pullback at some point, and that pullback will be an interesting opportunity to long. So you're just going to want to look for this sort of pattern on a particular altcoin chart, right? The best high time frame swing trades come when you have like a monthly chart. So again, look what we have here. We have a monthly chart going into a multi-month area of demand. The mid-range, you have a sweep of the range low that goes into that area. And then when you drop into the daily chart, which pairs well with the monthly, you can see that that sweep contains an order block, series of down close candles that we close above. That's the magic formula right there. And then once you have that, you're longing on either the first retrace here, and if you miss that, if this move and comes in, takes out this high, there's always a good chance it wants to kind of retrace after taking that liquidity and then move for the main target at the other extreme of the range. So you'll find this pattern on a lot of altcoin charts right now. I suspect SUI is a more interesting trade than something like Ethereum, because Ethereum and Bitcoin, like I showed you, have that kind of like naked low chilling there that's unswept, and it's, you don't want to be longing above like these like series of like higher naked lows when you're in like bearish high time frame order flow, because those lows like we have on Ethereum and Bitcoin are going to be downside targets, and you're trading counter trend, and it's just a lot harder than waiting for that sweep to happen and then trading with the trend in the other direction. Stens, you want to know about Fartcoin? Yeah, Fartcoin is a interesting chart. A lot of these charts, unfortunately, are kind of messy because they have these October 10th wicks that on some exchanges just went like totally nuclear, and the bottom is like all over the place depending on the chart that you look at. So it's very not clean. But I would say, generally speaking, Fartcoin has this very high time frame range here. Actually, let me pull up the just the trading view chart so it's got more data on it. So you can think of this as sort of like a range high and a range low. That huge bounce we had in the spring, you can see how that was just kind of like a retest of the mid-range, no closures above, back down we go. And then we take out the range lows. So there has been some sort of sweep here, right? There's a couple things that make me wary. Is it the 2-month chart? Yeah, so if you pull up the 2-month chart, you can see there's a very clear bearish imbalance here, fair value gap. There's going to be a tendency for price to want to reject somewhere in here and then go back towards range lows. We're going to have the yearly open right here in yellow, which is kind of like a flat candle. So we're pumping straight off the yearly open. What day was that? Last Thursday. Yeah, so I don't know that the bottom on this is like totally in, right? And this is basically the range here. Maybe you want to call it this because this low is messy. And that looks pretty nice because there's a nice respect of the mid-range at 47 cents, all those good things. I definitely think this pushes up towards like 49.50 or so, because that's like liquidity at the mid-range. You're then going to run into this fair value gap here. You're going to run into this large supply area right here. And so I think trades on Fartcoin for now should just be taken up to here, because I think you can come back down and sweep all of this out again. An area that's like really interesting to me on Fartcoin is this little daily order block here. So if price gives you the opportunity to come back down here and bid like this kind of 22 cents ish area, say we come out to this range high and we sweep it out and then we start breaking downward, we could see a situation where we just clear this out back inside and then back up. So you could bid in here, or you could wait for some sort of reclaim, some sort of bullish lower time frame structure and then get involved. That's a really interesting trade to me. That's a really, really interesting trade, because now you have like the high time frame high, you have the high time frame low, and then you would have like a double bottom sort of retest of this range low. And at that point, I would say price is now good to explore the other side of this range. And when I look at this, like I just see like all this kind of low resistance liquidity stacked up above the mid range. So I could for sure see this thing ripping up to, $1.40 again or so. And that would be a banger trade, however long it takes to have that play out. Could it rip straight there from here? Yeah, anything is possible with these shit coins, but the most high probability of entries for me would be another move back down off of the imbalance, off of the sweep up here, and kind of the 40 to 60 cent range, wherever this wants to top out, take out the range low into this origin order block, and then we go. This order block's really interesting too, because this was like when the winter mute FUD subsided, and we had a really sharp move off of there. So a lot of resting orders here that never got filled. But this is one of those coins, like we talk about, looking at the yearly charts for some of these altcoins, zooming out now that it's a new year. I do think that next year is probably like a bearish year in aggregate for crypto. But that becomes interesting because I think a lot of coins are going to give you like a chance to buy like really, really interesting levels for like very, very high time frame trades. And it's probably a good opportunity to take a step back and view all the blood as like an opportunity to flex your muscle as like a patient investor with like a very high time frame, and think about some of the quality assets that might be going into kind of generational type levels, the type of levels you could just kind of accumulate spot at over time and build like a 10 bagger or something. Hype is probably one of those coins. There's a reason why we call this channel Magic Lines, by the way. I drew this line a while ago. Probably random. But yeah, this 22-25 level or so, that's the mid-range of this super high time frame zone. So great area for us to get a bounce from. I don't know that this is it for hype. Problem with hype is you had this kind of gigantic little demand area here, and price never came back to it. It just kind of went away. It took a while for us to go back here to $22. I mean, I was here in the early summer calling for, $22 hype, and it took a while to play out because we came back in and we swept out this high. But this is like a really classic manipulation move here. You got expansion, all these fair value gaps met with expansion, and then the structure break, never a good sign. So this whole thing just looks like a lot of distribution above the range highs here. I would be surprised if we bottomed here permanently. I would not be surprised if this came back up to run some of this liquidity like it went up to like 45 or so and then back down, that wouldn't surprise me at all. So I think if you have a bag and you get the opportunity to sell it, above $40 again, like you should almost certainly take the opportunity to at least reduce your risk, I think. But when and if this comes back down to the, 12, 13, $11 region, I think this is going to be like a really, really interesting trade. And I don't know, we see this time and time again in crypto. You get this coin, it's hyped, it can do no wrong, and it goes up only, and then it just freaking dies. And then some of them stay dead, and some of them have like their Solana moment, and they recover, and then you get to ride that back up to glory. But yeah, this became a obviously very hype, very consensus trade. No pun intended. But I think there's a lot of projects in crypto that fit this kind of bill of like coins that have actual apps attached to them that either are generating revenue or have the ability to generate revenue. And some of these are at like different stages of their capitulation, right? So something like Uni, for example, has already had its like moment of death, right? Like Uni already died. It already died. And then it went sideways for it's been 1,400 days of sideways. And I do maintain that, in retrospect, if this pumps to like $100 or something, it's going to look like the most obvious shit of all time in retrospect. I don't know if this takes like another like 5 years or something, but it does just seem like it's sort of basing out here. So this would be a good example of a coin to just buy, accumulate, hold. The curve chart is not quite as clean as the Uni chart, but you have a similar situation here. I mean, I could argue that the curve chart looks rather bullish in all honesty. Takes a long time for these things to play out, but this just looks like a very clean deviation accumulation below the prior range lows at 32 cents. And then you get your break of structure here with that move up. You bounce, put in some intermediate term structure, but this bounce then comes back and gets swept out. So yeah, I mean the risk reward on something like Curve from this level with all the stuff that's happened looks like unbelievable, because the hope is that you're going to basically just take this back to the range high at some point, or at the very least, like sweep out some liquidity at the mid range, right? And that liquidity at the mid range is still like a 8.5x from here. But again, this is a lot of pain. This is 1,300 days of sideways pain, which is capitulation via boredom, time-based capitulation. But there's a lot of stuff like this, if you look, that looks pretty interesting. One of the spot bags I have, that I hold in small size, but I am kind of relatively bullish on is virtual. And I don't think the bottom is in here, because I still think this low here at I guess this is a market cap chart, but same. This low here, this is about 60 cents on the I'll pull up the real chart for you guys. Whoop. Yeah, this low here, this unswept low at 63 cents. I feel like we're gonna come back for that. I do. Doesn't mean we can't bounce all the way up to, $1.50 or so and then come back down and take it. But something like this is going to be a potential thing that you can watch out for. Some sort of like sweep of that 62 cent level, some sort of sideways accumulation, reclaim in the range, and then we can kind of turbo pump to the upside at all of these kind of like untapped lower highs. These become liquidity draws to the upside, and then you can kind of buy here 65 cents. And even if you sell for, just play for the lower high at 260, that's a nice gain. I think virtual is very interesting. I think it fits very nicely into kind of like AI robot narratives. Obviously, crypto as a whole is just kind of like dog shit from a narrative basis, and it's very difficult for a coin to overcome like the overall downward gravitational pull of the space when the space is just not hot, because the space just trades on hype until there's some sort of paradigm shift in thinking about crypto as a thing that generates revenues and cash flows, or there's like a better regulatory framework. It's just going to be hype based. And if that hype is there, the project is just not going to do well. And you're just going to have to kind of keep pulling up the chart and keep looking at it. But I would be trying to time this with a Bitcoin move below 73K or so, at least for a trade, because even if all of this is just to get a bounce trade on alts when Bitcoin bounces, when and if Bitcoin bounces from, the low 70s or high 60s or whatever, that could still be like a hell of a trade. Like you could see a lot of 3, 4, 5Xs on some of these altcoins from there. The bright spot in the crypto landscape, by the way, is Zcash. I think the Zcash chart is the real deal. Like that's what the yearly Zcash chart looks like, right? So big difference between the yearly Bitcoin chart and the yearly Zcash chart. Right? So in my mind, when I look at Zcash, I go, okay, price is going to want to go to 745 at some point this year, probably. Maybe next year, but this is the draw, 745. Very clean expansion candle, very clean closure above the mid-range of that yearly expansion. It just shows intent for price to want to go higher to me. And if I pull up a 2-week chart, there is no structure, right? There's no broken market structure here. Like we may have actually just put in the first structural higher low here. This looks pretty interesting on the monthly to me. So I'm going to stop drinking carbonated water on these streams. Going to burp into the mic. But yeah, you can see I have the monthly candles overlaid here on the right. And you can see this very nice sweep of the November monthly candle by the December candle into what is basically a giant monthly fair value gap. So you're looking for a bullish reaction from that, which we've gotten. And we talk about monthly sweeps wanting to be validated on the daily chart. Well, this is your daily chart. This is your daily change in the state of delivery here, because this is the bullish order block that swept out the monthly low. There's your closure above right here. And now we're looking for an opportunity to have this pull back and then long to take this up here. So I suspect this is what's going to happen with Zcash. Will there be a deeper pullback? Maybe. But I think there's your last week's expansion high, your last week's expansion low, 4-hour chart. Yeah, so you've got a weekly sweep with some bearish 4-hour market structure. So it is conceivable to me that this could come all the way back down and take out the weekly low at 404. But no matter where this pulls back to, like as long as this 302 level holds, I just think this is bullish. And so, you could just buy some here and average and lower if you're kind of like a low mental overhead kind of person. Or you could be a trader, wait for some retrace, wait for some sort of like daily sweep or something like that, and then try to get on sides at the daily expansion, assuming that that's going to hold. But you can see like we've got some really nice liquidity targets up here that have been unswept. So if I had to be long one particular crypto right now, I do think it would be Zcash, and yeah, look very, very interesting. I don't know if it pulls back this deep, but like, 423 or something is like a pretty interesting level because I could see it coming down here and sweeping out some of this liquidity, taking out some of the people who are long in here, and then tagging the mid range of this zone, which is interesting because you have like liquidity taken at both ends to form this zone. So this is a pretty strong region. I would think that like 370 should probably hold if this is going to keep being like immediately bullish. So yeah, buys all the way down here towards 420 or so. Again, the 420 level. That's got to be good, I think, for a move to 745. So if you want to keep playing in the crypto space and you need to be long something right now, I haven't found a chart that looks better than Zcash, but if you've got one, by all means, let me know. All right, I think it's enough about crypto. Let's shift focus to the world of TradFi, and I'll try to be a little brief here. That went a little longer than I was expecting in crypto land. Not too much to say about the stock market in general. The yearly chart on the S&P was just absolutely turbo bullish as fuck. Prior yearly high, 69.94, close to that 7K psychological level. So, always going to watch out for a potential reversal to form off of these high time frame levels. So that's worthy of keeping our head on a swivel for. But this looks like it just wants much, much, much higher. You got to think there's going to be some sort of monthly pullback at some point on this chart, because it's just been up only for a while with no monthly order block form back to the downside. So I do wonder if we get that at some point this year. But in the meantime, like the S&P just looks very bullish to me. I think I have, like 7,300 and 7,800 or so for my next two targets there. On the lower time frame, this looks really good to me. This right here was a liquidity grab manipulation into this. There's a monthly fair value gap down here below this 6,500 level. We then put in a strong move up, impulsive move, consolidated for a bit. I posted on Twitter back in second week of December. I was expecting a run of this consolidation, just to tag this order block here, and then continuation higher, and that's exactly what we got. So this level now, from 6,800 to 6,900 or so, is of particular interest to me because this is the breaker that ran all of this consolidation. So if you want a strong continuation move to happen, price typically just stops at the breaker and then goes. And so far that looks good because we came in last week, swept out some liquidity into the breaker, and you can see now we actually formed a new breaker. So somewhere 6,900-ish is probably like a really interesting entry for the S&P, because you could take a long at this low here, assuming it'll hold, and you could catch, the expansion out of this area, which could be like a 5-to-1, 6-to-1 trade to the first target I outlined, and like 12-to-1 to the final target. So that is all to say that stocks look really, really good. Which stocks look good exactly? I mean, I put a lot of money into Google back in early fall after I took more money out of crypto, and that ended up being a very good decision. The Google yearly chart is insane. There's your yearly candle. Very strong. So any sort of pullback on the 2-week chart basically is for buying. When you have a candle like this, like if at some point in the future you get a pullback on the 2-week chart and you put in some sort of like low and then you break that high and come back, that's just generally a buy when it's in like this sort of like crazy expansion period. So again, like structurally on Google, there's not a lot to analyze here because it's just up only candles. You really have to kind of get down to the lower time frame to see anything actionable. But for most of you, it's just going to be like buy pullbacks and go back to work. So Google looks insanely strong. The other huge chunk of my portfolio is Tesla. The Tesla chart in the high time frame looks really, really good. So I have price target on this of about $750 and $1,100. That's what I see from the high time frame structure. Price tends to always follow these periods of expansion, consolidation, manipulation, and then expansion. So I believe we have like a second expansion underway here. I believe this entire 2021, 22 period was a consolidation. This 2022 sell-off was a very clean sort of manipulation out of the consolidation prior to expansion. In my mind, had like a very nice bullish market structure put in here with these higher highs and higher lows. So I'm expecting, whether that's this or however deep it goes, I'm expecting some sort of continuation out of this range. I'm actually working on a Substack piece right now that I hope to release either later today or earlier this week. So if you're not following my Substack, I just launched it. It's at Magic Lines on Substack. We're gonna get these sub counts up. We got rookie numbers there, and I got to do a better job of updating that this year. But yeah, I think Tesla is like fundamentally undervalued at $455. I think it's like a $780 stock today. So I view it as chronically undervalued, and the price targets I have based on the fib extensions I use to trade justify that, because a 2x from this manipulation takes you to about 740, and if you just want to do like a basic sort of like symmetrical 1-to-1 move from this range, again similar level, low 700s. So I think it's like a relatively conservative target for me. And again, that matches up with the fundamentals. It just seems to me that like the market is fundamentally mispricing like the sort of right tail risk, the convexity involved with the robotaxi division of the company. I've looked at some of the higher time frame, multi-year leap prices, and they seem to be pricing in like 15-20% probability of success with the robotaxi division, and not really giving the stock like a good price to the upside, even when that is is a successful thing. I'm not quite as bull-hearted as Kathy Wood. I know she's got like a $2,500 price target on Tesla for a couple of years from now, which is the price target she's had, I think, every year since 2017. So, take that with a grain of salt. But I actually do think this is like a $2,500 stock if the robo-taxi thing goes pretty well. And then on top of that, you have Optimus, which is a much like longer dated thing, I think, realistically. But that's like not factoring in, the success of Optimus at all. So if the market starts really pricing in the future cash flows, net present value of Optimus, that could be a further catalyst down the road. So I really like the stock. And for somebody like me who also likes to write options for income, the amount of money you can make writing options on this is like wild, just like absolutely wild. Like I think if you have like $1 million in Tesla stock and you write like 20 Delta covered calls on it, you're making like $600,000 or so a year in income. Obviously, it's not as simple as that because you are giving away the upside of the stock if you do that. But one interesting thing I've started experimenting with is basically like levering up the Tesla portion of my portfolio. So like 2x levering Tesla and then writing calls on half of that notional value. So there's like income involved in it, but you're not giving away the entire right tail. Now I write options like a little more, I don't know if intelligently is the word, but like I don't just like write the options and just keep rolling them. Like I like to use market structure in defining where I write options. So if I see protected highs or protective lows developing in the chart, like I might write puts below protected lows, and I might sell calls above protected highs, and I might map out fib extensions to think about how far moves might extend and over what time frame, and then kind of like nudge the the strike price as reflected by that. So that's something I'm going to be talking about a lot more in the Discord this year, especially in the premium Discord, where I'm planning on doing like a kind of like week by week follow along on this strategy, because I think it's like really interesting and it helps us just learn a lot about portfolio management, market structure, options. So that'll be fun experiment if any of you guys want to come along for the ride on that. Other themes I'm looking at this year, very big right now on uranium. So uranium is super interesting because it plays into the AI narrative in terms of like energy sort of being the limiting factor for AI at our current juncture. And I think that all of these kind of like energy related things could have like a really, really big year. I know that Citrini is like really bullish on natural gas as well. So that's something I've been taking a look at, but honestly haven't seen anything in the charts yet. But the uranium chart looks really, really, really good to me. So this sort of satisfies my generalized setup I look for in a trade, which is that I like to look for price to have a range high, a range low. I like to see price manipulate the range low and then confirm that with expansion. And then I like to see price consolidating. So here you had a multi-year consolidation on uranium, right? This is basically 3 years of sideways consolidation. And then right here, you can see the manipulation, right? You see the consolidation, a run of liquidity, and then an expansive move, right? And now the basic thought is price has topped out. It's going to form some sort of lower high, and we want to position in that lower high to take the move to its logical conclusion, which in the case of the uranium ETF, I think is at least like $65, $66. But that's just a first target. Like in reality, like I think over a long enough time period, depending on how crazy the AI bubble gets, like this could just kind of blue sky break out to all-time highs. There's no telling how high this could actually go. But from like from my perspective, I'm viewing this as kind of like a hybrid investment / trade, where I might be like kind of leveraging up on it here and looking to kind of take profits on the leverage at like key levels, like this high at 60, like this high at like 65, and then kind of shave stuff off, de-lever, and like let the trade ride. On the daily chart here, we have what, in my opinion, is a really good setup, because we have this lower time frame daily range here in the context of this larger move up. So we got range low at 35. This is a good range low because it swept out liquidity and then caused an expansion, right? You can see how the range high here is unswept. So this is like a really good target. Like if you just wanted to frame a trade on this, like just trading to this $60 level is, in my opinion, like very, very high probability. If you follow the retrace down, right, you can see this kind of bearish lower time frame structure here. And then you can see the shift in the bearish structure after price taps this sort of origin bullish zone. So that's like your change in the character of the market. This right here is your bearish move that took the liquidity. So that's your series of down close candles on the daily. Close above that, that confirms your change in the state of delivery. And now you're basically looking for some additional setup to form on the retrace. And here you can see we get a sweep of that low and an expansive move, right? So at this point, in my opinion, this is ready to go higher. This wants to go to 60. I would suspect that this $40 low stays intact. So if you're framing a trade, like you could just enter here and take it up and then free roll the rest of that. I think that's like totally fine. Or you wait for this to get taken. Maybe there's a shallow pullback and you look for some lower time frame entry on the pullback and then take it up. So uranium looks really, really strong. But in the Discord last week, I gave out Energy Fuels, really interesting stock to me, and I like to kind of do these pair trade charts when I have like a theme. So like uranium is bullish, but what's more bullish, like uranium itself or some sort of company within the uranium niche? And you can kind of see the chart here of so many U's versus uranium. Pretty bullish chart to me. So we ended up taking the long as opposed to the uranium long. Again, this is God, this is the worst ticker of all time. This is the U ticker versus the uranium ETF, and you can see that U is like seems to be a higher beta play than the uranium ETF. We had kind of similar structure here developing on the daily. I actually gave this trade out in the spring. We caught like the pico low of this around like $4, and we made like a 10x in our options contracts on the way up here, sold that liquidity. But I think this is a similar thing now where you have the first expansion move up, the retrace, and now we're trading like the second leg of the expansion. Really need to pop this on a log chart for it to be visible. But we have this range low, range high. Again, this doesn't look symmetrical because it's a log chart, but the mid-range is up here at $41. This is where I'm expecting price to go to next after what is, I believe, just like a huge deviation of the range low. I suspect we go to the range high at $81 at some point as well. So really interesting trade here, in my humble opinion. I think this is some sort of, yeah, so the 2-month chart, just straight up bullish. When we drop down to the daily, which I like to pull, which I like to pair with the bullish order flow on the monthly to try to find like a lower time frame entry, you can see we had a similar thing here where we have this manipulation, liquidity grab, close above, validating this as an order block. And then on the retrace, the close above here validates this as an expansion, and up we go. So we got in this like nearly at the Pico lows on Thursday. So that was pretty sweet because I think we bought calls at around 1420 or so. So already up 28%. Woo! Hot damn. Looking good. So yeah, really bullish. Really bullish for 2026. Really like this stock. Commodities in general just like look incredible. If we look at silver, I think everybody and their mother knows now that silver is just turbo pumping. If you're like a swing trader, you know how to trade futures. I mean, this has got to be like maybe the best asset in the world to be swing trading right now. It's moving a lot. It's moving like very, very cleanly. I'm not convinced that this doesn't pull back again to the $69 level at some point. But I think like all pullbacks here are ultimately for buying on this. It looks really, really, really good. Definitely a little overheated at the moment, but like if you're day trading, like doesn't matter. Like you want to be day trading bullish day trades in an overheated daily chart because like almost every daily candle just, you just assume it finishes bullish and until proven otherwise. So loving the rocks, loving silver, loving gold. Gold miners look good. Silver miners looks good. It's just it's a great bull market there right now. And if you're just like sitting there trading crypto, like you're really missing out on that because it has been good. All right, I'm gonna wrap this with the chart requests from people. This stream got really, really long, so thank you to those of you who are still sitting around here for this. Appreciate you guys. We're gonna pull up Hood first because I know people like the Robinhood. Robinhood looks very sexy to me. Again, your yearly chart, really bullish. If you're trading, you're looking to get on side, take this to 153. Got the monthly sweep today. So I'm going to be looking on the daily for some sort of confirmation. Yeah. So Hood looks really good because you have this sweep here, this order block that we close above. And then on the retrace, we put in the monthly sweep and then the close above this order block. So I like Hood here. I like it to 155 or so. You probably just aggressively put the stop below today's low. Probably be okay, but if you want to play it a little safer, 101 is good. And this is the type of trade too that you could play for like a breakout because the higher time frame order flow does support this just going higher. So if you've been wanting to build a Hood position, pretty good time to do it. You just have to be concerned with like, if we get a sweep, kind of deviation of the yearly level, then maybe you have a deeper pullback, but ultimately probably resolves higher. So that's the only thing to be aware of. But yeah, I love an entry on that here. We got a request for Fly. I have not looked at this. Firefly Aerospace. Okay. Not looking great on the quarterly chart, but there's your previous month's high. Yeah, I don't know. It looks a little messy to me. It definitely looks like it's going to 29 bucks from here. But I'm not sure this doesn't sweep something out and kind of turn lower and maybe look for a bottom. Uh, I think this would become interesting if it swept something out, came back, and then started sweeping out some monthly lows or something in this kind of $20 region. But otherwise, would just be like looking to take short time frame trades on it. Pepe, the memes. Yeah, so Pepe, if we zoom out on Pepe, right, this is your higher time frame market structure. You can see the clear lower lows, lower highs being put in here. I view this whole thing again like this. This is just like a pump straight off the yearly open. It looks very, very sus to me. The first level I'd be super concerned with. Actually, this is a log chart, so that's kind of a ways off. Yeah, I don't know if we'll go that high. Let me pull up the 2-week chart on Pepe. I suppose I could see this going now. Yeah. So what I don't like on Pepe, well, unless you're bearish, then I do like it. Monthly fair value gap here. So this would be a pretty good setup for a short trade if you get some sort of daily sweep into this area. You know, wipe out some of this liquidity and put in some sort of sweep. And then I think you take this all the way back down. This is kind of a similar structure to what I was talking about on Ethereum and Bitcoin, where you kind of just put in all these lows and leave them behind. So I imagine that would be a good short trade at some point this month. And then the last thing I have on here is RKLB. Rocket Lab. That's a cool name. What does Rocket Lab do? It's a nice yearly chart. Quarterly chart looks good. Monthly chart looks pretty sexy. You know, looking at the monthly chart, your dream, if you're like a high time frame investor, is to get like some sweep and then pull back into the monthly order block and buy in here. Should be a bit of a pullback. You know, it could be 20, 30, 40%, depending on how bad it is. Don't really see any reason for that to happen at this point. Rocket Labs is Jeff Bezos' space company. Fuck yeah. That's cool. Yeah, I mean, if you're a trader, you have a daily setup here. You've got a pretty nice sweep of range lows, and you've got a nice close above this daily order block here. So if you get a move up here and then you get some sort of like pullback into this box, you know, from like 69 to $71 or so, this looks like a good trade back up to this high. If you're investing, I mean, it looks very bullish. It just looks like a bullish chart. You can always just kind of put on some sort of moving averages, be aware of where like the 200-day is for like going heavy on it, or just kind of like buy pullbacks to like 4-hour trend or daily trend and just average into it is usually just kind of what I recommend people if they're not trading and they just kind of want to get into a position. But yeah, it looks good. It looks good. I like it. Esten says Rocket Labs is not Jeff Bezos' space company. Blue Origin is. Rocket Labs is a 3D printing rocket company. All right. That also sounds cool. So they 3D print rockets, like the actual rockets that go to space? Hell yeah. Cool company. All right. I'll have to look more into that one. Thanks for the tip. I'm going to wrap the stream up there, guys. Hour and 40 minutes. Wasn't trying to go quite that long. thanks again to you guys who stuck around for the whole thing. Again, I promise I'm gonna try to do these every Monday from now on, and try to make this a thing. Uh, Thank you again for showing up, boys. Reminder, we got the Discord, Magic Alliance Discord. So check that out. Link in the description below. Go join, say hello. If you're not subscribed to the channel, please do so. Subscribe to the Substack, subscribe to the X. Going to produce a lot of content this year. A lot of good free content for you guys. We're going to bust out the content engine. It's going to be a fun year. Thanks for joining, guys. I'm going to end the stream here. Hopefully you got some cool insights, some cool ideas. I'll see you guys next week.